Today, we're diving into stocks that have taken a beating. We're talking about VF Corporation, Verizon, and Penn Entertainment. Join us as we uncover the reasons behind their recent struggles and explore why these beaten down stocks might just be the market's best kept secret. Let's get started. Welcome back, guys. Let's dive right in here. Thomas, you wrote a piece for MarketBeat about underappreciated stocks with nowhere to go but up. These stocks are not what I would consider bottom feeders. So what's the story behind the narrative here?
Yeah, so this is about the analyst. The analysts are a real driving force in any stock market. And the analysts have been beating up these names for the last year, but the market has front run and overrun the analyst sentiment. And now they're oversold. That's the opportunity. Most of these stocks are trading below the analyst's low priced estimate, which suggests that there is nowhere for them to go but up.
So before we get into these stocks and get to what Chris has to say about them, Thomas, if I can ask, is there a fundamental story here investors might be missing? Maybe Chris is rubbing off on me a little bit here, but I lean more towards a good fundamental story with these stocks.
Right. So these stocks are all fundamentally sound businesses, but they have had some headwinds. The headwinds have affected the growth outlook and their results. Not that results are bad, but they may be lagging the analysts' expectations, and that has led the analysts to reduce their targets. But now they're all facing turnarounds and have positive catalysts that suggest the stock prices will begin to move higher again.
All right, so the stocks that Thomas wrote about are Verizon, Penn Entertainment, and VFC. Chris, do these three stocks give you a reason to look further? Oversold, I get that, but is there a reason for that?
Thomas is going to probably have to sell me a little bit on Verizon. It's got a great dividend. I can't deny that. The whole wireless model doesn't really work for me right now, though. So I'd love to hear what Thomas has to say about that.
Right. The telecoms have been struggling. There's a lot of competition. Not a lot of growth. But Verizon is a high quality stock with established business. It's the largest mobile provider. Its revenue and cash flow may not be growing, but it's stable and it's sufficient to support the dividend. And there has been a recent analyst upgrade who cited an outlook for improving cash flow, debt reduction, and dividend safety, which is, I believe, the long-term catalyst for this stock.
All right, Chris, back to you before we hear from Thomas. What are your thoughts on Penn Entertainment?
Well, right away, I just think about sports betting, and I know I can't turn on the TV, for any length of time, or the radio for that matter, and you're hearing commercials about sports betting and from different things. But therein also lies my concern, is because there just seems like there's a lot of competition in this space. Thomas, what about that? There's just a lot of competition here.
There is a lot of competition here. And one of the things that's been weighing on Penn's price action over the last year is that its lean into the sports book basically failed. I forget the name of what they call it now, but it's been losing market share to DraftKings. So the recent announcement is that Penn is going to team up with Disney and rebrand its sports book to ESPN. And that should be a driver of business and help them regain market share in this event.
Yeah.
And then we have VFC. Chris, what are your initial thoughts on that one?
So I'll admit on this one, I'm more familiar with the brands that are under the VFC umbrella than I am about the company itself. I did some looking at the company since Thomas wrote the article. And I have to say, I think probably the three of them, I probably like this one the most.
Right. VFC, a good company, but they were a dividend king. They had raised their payout for, 49, 50 years, to a point that it was unsustainable. Then in the post bubble peak, they've had some inventory issues that weighed on their profitability. They had to cut their distribution. Stock price is down real low, but it's trading below the analyst low price targets. And right now what we're looking at is normalization in the Vans segment. Vans is their largest segment. It was down 20% this last quarter due to inventory normalization. We know that inventory normalization is occurring throughout the retail world. So I would expect for Vans results to begin improving within the next quarter or two, and for the company to be able to resume growing by next year. And the really important factor is that even after the distribution cut, it is still a high yielding dividend payer. and it has a sufficient cash flow to sustain the dividend at the current level.
So kind of jumping back to oversold stocks as the theme, Chris, what goes through your head when you hear people talking about oversold stocks?
Well, in general, Lacey, if it's the right stock, it usually means it's time to consider buying, adding to your position, or starting a new position. If it's one of my core stocks, I almost always believe, and that, if it's one of my core stocks, then I believe that the stock has a bright future, and so it's almost always going to be a buying opportunity. So, but what happens if you don't own the stock? Well, it can still be a buying opportunity, but I think you have to be a little bit more careful. There are times when stocks I guess what I would say is when they show technical or fundamental signals that they might be oversold, but they're really not oversold. There's other underlying problems with the business. That's why you just always have to do your due diligence and just see if the stock's right. And sometimes it just doesn't fit what you're trying to accomplish in your portfolio at any given moment. I mean, there are some people that love to have all dividend stocks, and then there's some people that would say, well, you know what, I've got enough dividend stocks. I don't need to dive into those anymore.
Well, as cheesy as it sounds, I mean, that really is why you need to establish those investing goals so you can make the right decisions.
Absolutely.
So we know in the world of investing, timing is everything. Recognizing the right moments to jump on opportunities can make a significant difference, right? But Thomas, like Chris mentioned, a stock being oversold isn't a standalone reason to buy, right?
And that's absolutely correct. I mean, I'm glad that Chris brought that up. Oversold can continue to be oversold if it's a bad stock. It can continue to trend lower indefinitely. And so the point with this article is that these companies are fundamentally sound. They've had some headwinds, but they're structurally sound, and they're on the brink of turnarounds that should help lift the stock prices over time. In this case, I believe oversold is, if not a signal to buy, at least a condition to buy, and is certainly a good sign for investors who are interested in these stocks to get them on their watch list and be prepared to start nibbling on them.
Well, there you have it. These companies may face some headwinds and hurdles, but to our viewers, keep on seizing these opportunities in the market. The stocks may just hold the key to promising returns. So don't forget to like and subscribe for stock market updates. As always, check out the resources I've linked for you down below. It includes our latest new and free report, 7 AI stocks to invest in. Leave us a comment down below. Let us know what you'd like us to discuss next. And until then, we'll chat soon. Thanks, guys.